there's a narrative that over, I'm sure you're very familiar with the Bitcoin cycles, with the 4-year cycles, following the halving and things like that. There's a narrative out there that all of the big corporations and all the institutions, the big investment funds, they're buying Bitcoin right now and they are not going to sell it. And that's going to make us not go into the same kind of bear market that we've seen in the past. Is that your strategy? Is no matter what, like even just taking into consideration, there is going to be a bear market and you guys are just going to hodl through it and not care if the price goes down, 85% again? What is your take on that? And how are you guys handling,
So Ben, just a basic set of principles. First of all, Bitcoin is the apex property of the human race. There is no property invented in the history of mankind that is better than Bitcoin. Not land, not gold, not silver, not stocks, not bonds, not the giant stone coin of the Yap people, not NFTs, not art, not baseball cards, nothing.
I love it.
Okay, so it's the apex, it's property. It's also the longest duration asset. That means there's no reason you can't hold it for 100 years. It's better than owning all of Manhattan. It's better than owning, the center city blocks of the greatest cities in the world. This is like Manhattan in cyberspace. One day 1 billion people will live there, then one day 5 billion people will live there. So I'm telling you, 5 billion people are going to want to own property in cyberspace. There's only 21 city blocks. How long are they going to want to own that property? How about like 1,000 freaking years? Right? Like there's no reason why the property isn't good for 1,000 years. It's an open software protocol that's only going to get better over time. The English language has been around for quite a while, right? How about Arabic numbers? Been around for quite a while. A protocol can last a long, long time. So we've got this issue of, is it long duration? Yes. Is it high quality? Yes. When should you ever sell an asset? The theoretic, and this is why people like the models are all just misleading people to make awful dilutive decisions, destroying their wealth. The only time you should sell an asset is when you have knowledge it's going to be impaired. You can't take it with you. It's going to be impaired and you can't finance it to buy the next asset. Well, this is not going to be impaired. This is property in cyberspace. Right? And there's nothing better to buy. There's nothing better to buy, right? I'll say it a third time. There's nothing better to buy. So if you're buying something which is potentially going to last hundreds of years and there's nothing better on earth to buy, why would you ever sell it? Yeah. So that's the first point. You're trading it for what? You're trading a strong asset for a weak asset? In nature, there's a flow energy flows from the weak to the strong, right? Water flows downhill. Energy flows from the weak to the strong. In free markets, capital flows from the weak asset to the strong asset. In currency markets, it flows from the weak currency to the strong currency. So it doesn't really make sense to trade out of that ever. Let me make one more point. All those models, they're irrelevant. As I say, they're irrelevant. Like the 4-year halving, irrelevant. All your back-tested models for the past decade, irrelevant. They're all based on history. Okay, they could only be relevant if there were no external actors or external energy sources. When Godzilla comes to the playground, your models of who's going to win the pinball tournament are irrelevant. You could tell me, I've been at this pinball tournament for the past decade, and I know that always, like, the two dudes on the left side of the table win because there's a tilt in the table. When Godzilla blasts your pinball table, it's irrelevant. So the halving, what does that mean? It means nothing, because all these miners are coming public, and as they come public, they're going to have access to infinite, cheap, or free capital. They're not going to sell any Bitcoin. They're going to buy the Bitcoin. Stock to flow is going to infinity. Then stock to flow is going negative. When all the exchanges and all the miners of Bitcoin are public, there's no reason why they couldn't issue billions and tens of billions of dollars of equity and debt and buy Bitcoin. Why would you buy Bitcoin? Well, my investors want the Bitcoin. Well, what if the investors don't want the Bitcoin? What if the investors hate Bitcoin? Well, if investors hate Bitcoin, they're not investing in publicly traded Bitcoin miners, are they now? Right? Nobody's investing in a publicly traded Bitcoin exchange or publicly traded Bitcoin miner or publicly traded Bitcoin company if they hate Bitcoin. So as the shareholders rotate, what you realize is there's no rational reason for anybody that ever earns Bitcoin or trades Bitcoin to ever sell the Bitcoin, which means that the stock to flow doesn't matter, which means the halving doesn't matter. What matters? What matters is when someone shows up with $20 billion and they want to buy Bitcoin, that matters. What happens, if Tesla buys 10 billion in Bitcoin instead of 1 billion or 1.5 billion? That matters. Is that in your model? No, it's not in the model because no one ever did it before this year. So you couldn't have it in your model. So that's why I think the models are only interesting in a closed adiabatic system with no new actors, with no new developments. But there's a pretty big development here. It's $400 trillion worth of monetary energy sitting in weaker assets.
Yeah.
And so another way to say it is 400 trillion gallons of water that are in a reservoir uphill from you. And if I poke a hole in the dam, that 400 trillion gallons of water is going to want to flow downhill. And when that flows downhill, it's going to wash out your hedges, your playgrounds, your cities, every beautiful structure you've built, your sculpture, your artwork, your ports, your fleets. Everything is going to get negated by the 400 trillion gallons of water flowing downhill. And so you really got to keep your eye on the dam and figure out at what rate is the monetary energy in the rest of the universe entering Bitcoin, because that is going to dictate everything much more so than any model. So hopefully that answers your question, right? Like, no, we're not selling it. We're not trading it. There's no exit.
You're not getting interest on it either. You just got it. You're hodling it.
It's a very simple idea. Wait for the water to flow downhill. And by the way, stay kind of out of the way of the water. Yeah. You want to make money on this, set up a little turbine, and as the water flows downhill, turn the turbine and you can extract some hydroelectric power off of the water flowing downhill.
I think that's good. I mean, figure out what you can do to help the flow. I mean, that's why I do this YouTube channel. That's why I started this YouTube channel years ago. Was because, I always use the example of Wells Fargo. They got real big by selling the shovels during the gold rush, selling the tools for people to make money. And that's what we try to do here with education, and bringing on guests like yourself.